In this video, I'm gonna give you the full blueprint how simple trading is. Like, people get twisted and they get confused and they think trading is an overcomplicated sim that you need to have like 15 different rules and 15 different indicators and all of this, which the reality is it's more simple than what you think. I use no indicator. The only indicator I have is the EMA, which is not my main confluence. It's like an add-on confluence. It's like a moving support or resistance. So it just stacks on everything else. But I have 5 steps, that's it. And I'm gonna go give you a quick explanation how to have like a different perspective on trading. Let's cut on some trade that I wasn't able to cut the previous week, but they're all of them great trades. And actually, since I don't want to ruin that, I'm just go to the same pair, but there, for example. Okay, so NZD USD. Let's talk a little bit about last week, because last week, okay, we started the week here. Let's go with the daily, right? The weekly, sorry. So weekly time frame. As you can see, the weekly time frame, it is bullish because, and again, if you haven't mastered the market trend, you need to, because you're 10 steps behind. That is what keeps you behind, because you don't know if something is bullish or if something is bearish. So let's take it simply from here. Higher low, higher high, those things going together. In order for a higher high to be created, you need a higher low. That's fact, that's a rule. Higher low and a higher high going together. So in order for this market to break and go bearish, it needs to close below the higher low. The higher low is the shield of the market. So if we close, and only if price, it could just, price could be here and creating like that and doing that, all that is nothing, okay? What matters is the structure points. That's why it's so important to know the market trend to the fullest. It counts only a body closure, not wicks, not the wicks on the top or on the bottom, just a body closure. In this example, for instance, it has closed fully, so the structure has been broken. But what makes it more tricky is the lower high, for example, for instance, in this one is the same as the higher low. Lower high and higher low, they are the exact same things. Both are the shields of the market trend, and also are the last points that the price pushed the current price action to go down. For example, this one wasn't the last point that pushed the price down here. We have another structure point which is down here. This one was strong enough to push price only up here. Price came back, and then we had the strongest push. Where is the strongest push? The one that created the break of structure. That is where we're placing the lower high. It's the same here. This here was the strongest point and pushed the price to create a new higher high. So this is the higher low. So higher low and lower high are the strongest points and the last points that push the price to actually make an impact inside the market, either break the structure or create a new one, continuation. So in this case, since we have the lower high here and the lower low here, price what does? It breaks above. So we go bullish again. This is the higher high. And which point was the strongest one to push the price? This one. Higher high, higher low. That's how you identify the market trend. Everything else besides that is basically noise. And once I finish the example with NZD USD, I'm just gonna quickly show you a trade on Euro GBP that most of you wouldn't have cut because you would thought something completely different about the market trend. But let's focus on NZD USD for now. So we see that we are bullish. We know that we're looking for buys. Okay, let's go to the daily time frame. Daily time frame, we delete that and we start doing the exact same thing again on daily time frame. This principle is the exact same for everything, okay? Just to clarify. So now I'm not gonna go fully on how to, let's just focus on this one since it's quite simple to see. Okay, and then here we are lower high, lower low. Price goes up, breaks down. So this is the lower low, this is the lower point at that moment. This was the lower point, and this was the strongest, like the last strongest structure point that pushed the price down there. Not this one, because pay attention. This one up here only had power to push the price up until here. So this one, it's the lower high for this lower low. But since we have a new, like since the lower low got broken, that means that we have a lowest point at that. So that if that happened, that means that we have another strongest point that pushed the price. As I said, lower high and higher low, the same for bullish and bearish, are the structure points that had an impact, help the price to have an impact, either continuation or a break of structure. So lower high, lower low. Then we completely break the sealed, the lower high, and we go bullish. So now higher high, that's the highest point at that moment, and higher low, this is the structure point that pushed the price and caused a change in the market. So now, and if you say this one, I wouldn't count this one. I want as clean as possible, something that can be look as clean as I draw it myself, something that I can call an elbow. Those things here, we call them elbows because they have the shape of an elbow. So of course it's hard to be like drawing it in yourself with a line, but we're looking something as close as possible. So higher low, higher high. Now, as you see, I'm only counting the bodies, not the wicks. So that means, let me place it much better, because that's not how it's supposed to be placed. And then you place it right here. As you can see, nothing has closed above. And again, only wicks, that does not count. We're looking for a body closure. And if you have a straight line and put it just in the bodies, you will see that nothing has closed above. So that still remains the higher high, and that still remains the higher low. In this case, if everything starts doing that, if prices starts doing that, you will probably think that we are bearish, but that's not the case. We are not bearish just because price start to do that. All right? We are very bullish, and most of you people will see that, and instead of just keep on trying to look for buys, you keep on trying to look for sells, and you keep on going to be the liquidity for others that know the market trend. So once we know that both of the time frames are bullish and bearish, and like if they're both in sync, bullish, bearish, but in some cases, but that's just an add-on, that's more experience, like you need to be more experienced. If you see that the weekly is bearish, for example, at the daily it's bullish at the time, but it tends to go bearish, that's a more risky trade. But now I'm talking just the plain, that's the simplest strategy for everyone, how to be a beginner trader, okay? And also you need guidance, you need people to have around you. That's why I'm building my community, which I'm sharing everything for free every single weekend. Every single weekend I'm helping everyone, sharing my pairs for the week, and also updating everyone live about when I'm taking a trade, when I'm taking a loss, when I'm taking a win, everything before and after. So I'm trying to be 100% transparent, but people actually sometimes are not willing to put a little bit effort. Anyways, let's keep on explaining this pair. So this pair, we have both weekly and daily bullish. So we know that we're looking to buys. It will make no sense for us to look to sell in a very bullish market. So the only thing we have to do now is find a zone with a lot of touches on the daily. You look both on the weekly and the daily, but the weekly sometimes can be a little harder to find a zone because it's, as you can see, every single candlestick represents a wick. So sometimes it can be a little bit harder. In this case, we have clean touches in this zone. And as you can see, we have 1, 2, 3, 4 touches. That means that the price, whenever it's there, it respects that zone. And the same for the daily. As you can see, we have a lot of touches here, here, and here. So this zone is both weekly and both daily. So that means that has a bigger value. This zone is even stronger because it's being respected in both weekly and the both daily timeframes. So what we're doing now, since we have find the market trend, and that means the direction, we have find the zone in the most respectable timeframes. So now the only thing we have to do is wait on the 4-hour time frame for price to give us a pullback and to slow down, because remember guys, price will come to the zone, but you need to have a slow down sign. I have that. It's part of my strategy. And if you want to learn more about my strategy, you can personally DM me and we can discuss more and further options. I've made many more flexible teaching lessons for you guys, so it can be more affordable for everyone. So price, we're waiting for it to go inside the zone. Of course, here it went just a little bit above, but now the zone, I think once I mark it, I had it around here because I was more focused on the daily, but I just wanted to show you. But still here it can be, and then down there is where all the magic happens. I saw that price was first slowing down on the 4-hour time frame. 1, 2, 3 slowing down candlesticks. That indicates that price is about to reverse. But first steps are the finding the direction and the zone. That indicates me the direction, and then the zone that potentially the price I could see a slowdown and return. That's the same here. I knew the zone, then I saw the slowdown on the 4-hour time frame. Then the only thing I had to do is know the market trend again, knowing where the structure points are. Let's say on the 30-minute time frame, it was this one, the lower high and the lower low. It's very important to know. Then you find your entry when we break the structure, because at the end of the day we're going to buy, so we need to go bullish. And you can either set your take profit. I will always aim for 1 to 1.5 now that I'm at my funded phase, but we can go for our take profit zone, easy TP, price breaks it easily. And what I do like most about that is that it gives us one of the best reverse patterns. It's head and shoulders or inverted head and shoulders. It depends if we buying or not. So this is for me the best reversal pattern, head and shoulders. And if it's, for example, as here buying, it's inverted head and shoulders. As if you knew and understand this reversal pattern, you will see it as well here. I can flip it so you understand that it's a head and shoulder pattern. It's the cleanest as it gets. Left shoulder, head, right shoulder, break. And now, as the price is like that, we could potentially anticipate a retest in the neckline to keep on going down. And like that, as simple as this, you have a full market breakdown, how I view the market and how you should view the market. Because trading is really simpler than what you think. Now, as I said, I'm going to give you a quick example why market trend is so important based off one trade I took 2 weeks ago or 3 weeks ago. On those two trades that made me a lot of profit inside my funded accounts. And once I took this trade, it was basically back here. That means that this here, for example, before I take those two trades, right? This here, I knew that is bearish and not bullish. While most of you will be looking for buys and you think that we're creating higher highs and higher lows, which is not the case. Because let's take it step by step. Higher low, higher high. Price breaks the structure and we have a lower low. And which one was the structure point that make an impact, helped to make an impact? lower high, up, there. Lower high, lower low. If we go bullish, we need to break the lower high. If we have a continuation, aka a new lower low and a new lower high, we need to break the lower low. Nothing has happened, only wicks, not body closure. So we remain very bearish. And the results are here. One trade I caught, two trades, and I missed one here this week. I missed one, and I took another one which I really liked, and I got wicked out because I think this prayer is going to create a new lower low. It's time for this lower low to break. So I think it's time for this structure point to break. But the whole point of that is to how important it is to understand the market trend. If you learn the market trend properly, then in just few steps, and that's it. If you want to learn more about me, you can just join my free Discord community, DM me personally, we can discuss more and go a little bit further and deeper to my strategy and my options about helping you. Click the subscribe button, click the bell so you don't miss any new videos. Follow me on my social media, I will leave the link in the description, and don't miss the next ones.